CS, Henry Rotich, Louis Kasekende, Deputy Governor, Bank of Uganda, Charity Dualo, Deputy Governor, Reserve Bank of Zimbabwe, Mr. Wagara Melchior, the Vice Governor, Bank of Burundi, representatives of the Bank of Mexico, Bank of Zambia, BCAIO, representatives of the World Bank and IFC, Mr. Habil Olaka, CEO of the Kenya Bankers Association, Mr. Charles Rigera, the CEO, Higher Education Loans Boards and Chairman, CIS Kenya, distinguished guests, ladies and gentlemen. I think the first thing I need to do, I have two things to do, three things actually. The first is to dispel a rumor that you all heard about the 6 lions that were marauding in the neighborhood. And I want to dispel the rumor that the organizers of the conference released those lions to ensure that you stay in the conference. Anyway, I'm told that there were female lions and they were on a girl's day out. But in any event, the warning, I think the safety warning here is stay in the conference, you'll be safe, and stay in groups. So that's okay. But good morning to all of you. It is indeed a pleasure to be here with you today, to welcome you all to the 3rd Regional Credit Information Sharing Conference, and in particular extend a special welcome to representatives of central banks from various countries around Africa and from Mexico. That we gather once again for the 3rd Regional Conference is evidence that CIS is increasingly becoming a critical aspect of the financial system. I would add that CIS, the whole concept of it, shows a lot of vision by you and those that were around when this situation was, when this was created. And it reminds me of that story of the Chinese emperor who wanted to plant an avenue of, some trees, specific variety of trees. And they told him, but emperor, it will take 400 years for those trees to bloom. And his retort was, okay, in that case, go now and plant those trees. There's no time to waste. So it seems to me you put together the CIS, the Credit Information Sharing mechanism, not perfect, but there is 400 years, so we need to work on it, from today. The theme of this conference, CIS for Innovation and Financial Inclusion, Mikopo Kisasa, is indeed timely as it resonates with the objectives we have set to drive the Kenyan financial sector. These objectives include innovation, lower cost of credit, transparency, and disclosure. Having an inclusive financial sector goes beyond merely access to financial services to include consumer protection and making sure that the duty of care owed by financial institutions to their customers is well executed. In addition, the provision of sufficient information to assist consumers in making informed financial decisions is a fundamental enabler in enhancing financial inclusion. As you are aware, information asymmetry in the financial sector is very prominent, and as such, one of the hindrances to deeper financial inclusion. To eradicate this, transparency in the pricing of credit by commercial banks and other financial institutions cannot be overemphasized. It is in this regard that the Central Bank of Kenya has started publishing the average lending rates for various loan products, as well as the overall average weighted lending rates by commercial banks. This will enable the borrowing public to make informed borrowing decisions, which in turn will facilitate a competitive banking sector Okay, there we go. So which in turn will facilitate a competitive banking sector with high quality and reasonably priced products. It seems to me that we are in an interesting conjuncture where we have the equivalent of a perfect storm, where we have technology. Josh mentioned just a moment ago the information, the importance of information, and using technology to bring together all this information about each one of the consumers. And then, of course, you have the positive political economy, because from a political economy standpoint, this is very, very beneficial. I mean, the stars are aligned in that sense. And of course, it makes perfect sense, business sense, to the consumer and to the lender. So I think we have a perfect storm where we can actually make a lot of progress in a very short period of time for the objectives that we all know, which is transforming the lives of our population. Ladies and gentlemen, I know that the topic of low cost of credit has been overanalyzed, sliced and diced, and reheated and served cold, if you may. However, this conference brings together creative minds that can innovate new affordable products designed to suit the needs of the customers at the bottom of the pyramid. This would also require financial institutions to align business models to support, especially small and medium-sized enterprises. Further, the lower cost of credit can also be achieved through continued collaboration between actors in the sector to develop innovative distribution channels. It is therefore paramount that financial institutions embrace financial innovation in order to enhance coverage of financial services and reduce transaction costs, particularly through electronic and mobile money transfers. In this regard, specifically about innovation, I would like to note that CIS is one of the most inventive mechanisms in Kenya that has contributed immensely to the development of the financial sector. Despite being a young concept, the success achieved by CIS is remarkable. This has been duly recognized in Kenya's enhanced ranking in the World Bank Doing Business report, as we have just heard from Josh and indeed the World Bank representative. However, despite this remarkable progress, we have three critical concerns that represent as challenges to the credit market, regarding CIS. The first of these, it is said that lenders are quick to inform consumers when their credit profile is poor, but mute when the score is good. So again, asymmetric information flow, if you may, of a different kind. Consequently, borrowers only know about the credit bureau when there is a problem. This needs to change. Banks in Kenya have been sharing positive data for 2 years now, and therefore must begin to inform and reward their low-risk customers with better terms. Secondly, lenders must be willing to invest in efforts to ensure highest standards of data quality. This is important because a borrower's credit report is a scorecard on the character of individuals and corporates. It is imperative that every effort is made to provide accurate and updated information on each of their customers without regard to status or social standing. We are looking forward to hearing some experiences, including from Mexico, on some of these points. Thirdly, there is need to address consumer complaints associated with credit information as promptly as possible. Where these issues escalate to disputes, lenders should explore alternative dispute resolution mechanisms. I'm confident that the deliberations regarding alternative dispute resolution, which are part of this conference, will provide insights into the critical aspects of consumer protection that are needed to ensure credibility of the whole mechanism. On our part, as the central bank, we will continue to play a supervisory role effectively and ensure that we monitor very closely compliance with CIS reporting requirements, given that sharing comprehensive information on a timely basis is the only way this mechanism can reach its full potential. It is important to note that central banks are also beginning to explore effective use of credit information to strengthen banking supervision. I am informed that the Bank of Mexico offers a useful case study that will be discussed in the first session of this conference. It is important that central banks invest in the analytical skills needed for effective utilization of the data for supervision and monetary policy. Ladies and gentlemen, I wish you all very fruitful discussion as you share experiences that will shape the future of CIS in Kenya, Africa, and beyond. It is now my distinct pleasure to welcome Cabinet Secretary Henry Rotich to officially open the conference. Karibu Waziri.